You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mish Shedlock, editor of Mish's Global Economic Trend Analysis. Welcome to the show.
Pleasure to be back on. Hey, a lot going on in Europe, a lot going on in Brazil, China, the emerging markets. Even the GDP, even the latest economic releases, a lot of interesting details in those too. So where do we want to start? Well, how about the migration crisis in Europe? I did the math on that, Jim.
And what do the numbers look like?
They want to spread around, 120,000. They passed a quota over the objections of 4 countries. And Hungary, Slovakia, Bulgaria, and Czech Republic all said, no, we don't want any part of this forced quota plan. The EU ministers passed it anyway, and said we're going to move around 120,000. Well, there's 3,000 to 4,000 a day flowing into Greece. Do the math on that. Multiplied by about 30 days, you get 90,000. A month, multiply it by 4,000 a day, and you get 120,000 a month. Meanwhile, they're planning on spreading around 120,000 over the course of a year. There's some 16 million people displaced in Syria, but let's not count those. Let's just look at there's almost 2 million in Turkey and another 1 million in Lebanon. And if just the people that have already left Syria were to head to the EU, we would be talking about 290,000, 260,000, something like that, a month flowing into Europe. And that's what happens when you offer free goods and services, Jim. The flood is not going to stop. The idea that they're going to fix this with some quota is absolutely insane.
Well, I just saw a news shot where they're asking people, why are you here? Why are you trying to get into Europe? Well, there was a large group of people from Pakistan. Mm-hmm. Like, how are they displaced from Libya or Syria?
Well, they're not, and Syrian passports are actually in high demand. They're forging Syrian passports. They're stealing them because if you've got a Syrian passport, you can get in. And they even have what they call ghosting, where someone lends their passport to someone else who goes over there, and then the passport, obviously you'd have to be pretty trusting to do this to some friends, and the passport gets mailed back to Syria, and they do this again. So a lot of fraud going on in this, and a lot of people who are claiming that they're political refugees when actually they're economic refugees.
I was always wondering, if it's economic, why don't they stay and improve their own countries?
Well, that's a good point. And the U.S. has made a mess out of things. Perhaps that's one reason. We've meddled, and I'm wondering too here, the U.S. has finally come to grips with saying, you know what, we're not going to object too loudly for Russia being in Syria. And I think the reason is that Merkel put pressure on President Obama to say, look, we need to do something about this crisis right now, and even if that means propping up Assad in the name of stability, that's what we're going to do. And, interestingly enough, Russia wants to fight ISIS. Iran wants to fight ISIS. The U.S. claims to want to fight ISIS, yet we're supporting Al-Qaeda rebels who are, arguably no better or maybe only slightly better than ISIS. It's the U.S. that destabilized Syria, and if anyone ought to be forced to take refugees, I guess the U.S. ought to point its finger at itself for its very, very destabilizing policy. And the irony here is the U.S. blames Russia here now for destabilizing the situation. No, I don't think so. Actually, Russia's probably a stabilizing force.
What about word that the Chinese military is also now in Syria?
I don't know. I haven't heard that. China usually stays out of these messes. There's nothing for China over there to gain.
Just perhaps they like to show that they back Putin.
I don't know about that. If they're there at all, it's a token effort and nothing will come from it.
What do you think the long-term result of this migration is? Will it stymie or stifle the European economy, which already was...
It has to. Now, the Keynesian fools are out there saying, well, Germany's losing, its death rate is higher than its birth rate, so, we need these people. Well, no, you don't. Most of them are going over there. They don't speak German. They don't speak English. They can't be integrated into the workforce over there easily. It's going to take decades for that to happen, if it ever happens. A lot of them are just interested, quite frankly, in a free handout, free shelter, free food. It's better than anything they had in Syria ever. So there's not a lot of incentive there for anything but fraud. So the idea is that you can undertake expenses of these kind and it'll pay for itself is quite ludicrous.
Should the European navies be patrolling off the shores of Africa and the Middle East to prevent these people from leaving in the first place?
Well, no European Navy that I'm aware of, but yes, I would think actually that border controls are needed primarily on the border of Greece and Turkey, and the EU budget ought to pay for that. They ought to do what Australia did and just come out and said no more. You still need to stabilize Syria before these people can go return home, but the crisis now, you have to stop the influx. So we'll see. I don't think they're going to do any of that, and the burden on Europe is going to be pretty high here. It is going to cost them a lot of money, increased taxes to pay for these people. There's no other way around it.
Right now, it's being used as an election issue in both Canada and the U.S. Are politicians falling into a trap?
Well, everywhere. Look at Donald Trump here in the United States. He wants to, build a wall, across the border of the U.S.-Mexican border. So, as far as schemes go, it's economically unsound, but it's better than, say, dropping bombs in Iraq and Afghanistan and even Syria now that has been the real destabilizing problem. I think building a wall is a waste of money, but as far as waste of monies go, our policies in the Mideast have been so counterproductive that we actually created ISIS. That's what's happened. Meanwhile, the economic reports are coming in. Durable goods number out today does not look so hot. The third quarter GDP is ticking along at an estimated 1.4% or something. I expect some downgrades to third quarter, which was revised hugely up. I think they're going to take some of that away. The odds of a Fed hike have now been moved all the way out to March, following some recent economic reports. So these rate hikes keep getting pushed further and further away, and the reason is the U.S. and the global economy keep weakening and weakening and weakening. And that's really what it boils down to, and we're starting to see it in the stock market, and with increased volatility, and we get these late-day rallies that just go nowhere because there's no follow-through. In contrast to, say, a year ago, when all the dip buyers were immediately rewarded the next day, and the dip buyers are not doing so well today unless they're catching the absolute bottom and they're selling in a spike. I think we're on the verge here of a market collapse. Tim, that's my opinion, but we'll see.
We'll have more with Mish Shedlock right after the break.
Unbelievable harmonies, spectacular performance, Bird Dog and the Vintage Electric Band, the ultimate tribute to the Everly Brothers and Simon & Garfunkel. In Oliver, October 2nd. In Kelowna, October 3rd. Buy online and save at ontourtickets.com. More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome back. We're speaking with Mish Shedlock. Mish, what kind of a collapse are we going to have? Is this going to be a 1929 collapse, a 2008 collapse, or will this be its own unique beast?
I think it'll be its own unique beast. And by collapse doesn't necessarily mean an immediate plunge, although it certainly could happen that way. A collapse could just be a slow, long, prolonged, agonizing decline like what Japan went through for 2 decades. Any of those or any combination of those is possible. I don't think we're going to see a same kind of collapse as fast as we did in 2008. I think it's just going to be one of probably prolonged misery, and those are the hardest actually on everyone. People just saying, well, my God, just let's get this thing over with, and it just never seems to end. I don't know. We're all guessing here, Jim. Some people think that this is the dip to be bought, and we're off to new highs, and the Dow is going to hit 40,000 or whatever they think it's going to hit. But by the way, that was a prediction that Harry Dent made in 2000, and and now he's predicting a collapse all the way to 6,000. So whenever you go out and make these extreme kinds of predictions, the typical thing is you look foolish. So when I'm talking about a collapse here, I'm talking about, it could be 40%, but it also could take 3 or 4 years to get there. So, 20%, 10%, 5%, the stock markets go nowhere perhaps for 7 years. That would be a problem in and of itself when you look at pension plans, when they're assuming 7-8% a year annualized returns and they're getting 0. Do that for 7 years and you're 30 or 40% more in the hole. So, it can play out in any number of ways like that, but let's just say I don't think it's going to be any good.
Well, if you look at the collapse in 1929, that took 24 years to recover.
It took 24 years to recover, but if you got in at the bottom in 1933, you actually recovered pretty fast. There was a collapse, a secondary collapse in 1927 or 1937 or so. 37, 38, and then after that, everything was looking up. So the same kind of thing can happen here, and people are going to be blaming the Fed. We're going to hear it. We're going to hear, Krugman's going to be saying, "Oh, see, you shouldn't have hiked rates," or "See, you should have cut," or "You shouldn't have even been talking about hiking rates." Look, the seeds of this crisis were sown actually because the Fed was too loose. And that's the bottom line. There's going to be hell to pay, for this, whether it plays out in another crash or whether it's just a slow decline or just a stock market that goes nowhere for 7 or 8 years. Any of those is possible. But the seeds of this decline, the seeds of this demise, all lay in, the Fed's QE policies that actually pumped up the markets, pumped up the financial markets, did nothing for the real economy. we would have been better off taking our hit in 2008, 2009, letting the banks fail, letting corporations fail, and starting all over. Instead, we re-blew the bubble, made it even bigger, and there's going to be a bigger price to pay one way or another. Not necessarily a straight line crash, but just it could be a slow demise, like I said, over a fair number of years.
Did they learn their lesson that really things should not be considered too big to fail?
Here's the number one rule. They never learn their lessons, Jim. With that, I gotta go. They keep repeating the same mistakes over and over and over again, and I don't think they're ever going to get it right. And now we've got this talk of negative interest rates people are discussing right now, which is actually quite curious when the Fed seems like it really wants to hike. Well, they might want to hike. If the market doesn't let the Fed hike, the Fed's not going to go along with it.
Thanks a lot for chatting with us.
It's a pleasure to be on the show.
My guest has been Mish Shedlock, editor of Mish's Global Economic Trend Analysis. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. Our YouTube channel is Talk Digital Network. Comments can be sent to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.